Welcome back to Tax to You, the channel where we answer all of your tax related questions. Today I'm going to be answering what happens if you miss the 31st of January self-assessment deadline. To do this, I'm going to cover when the deadlines are and what they relate to. Remember, there's more than one deadline that you might need to be aware of, the penalties and charges that apply if you miss a deadline, and what can be done once a deadline is missed. So let's begin with the deadlines that you'll need to meet for self-assessment. First of all, we have the filing deadline. For anyone submitting a self-assessment tax return online, you would need to do this by the 31st of January that follows the end of the tax year. So the 22-23 tax year, which covers the period the 6th of April 2022 through to the 5th of April 2023, would have a filing deadline of the 31st of January 2024. You will also need to have your tax bill paid by this date if you have tax due for the 22-23 tax year. More on this later in the video. If you're submitting a paper return, which is much less common, then the filing deadline is the 31st of October following the end of the tax year. For both of these deadlines, the official cutoff point is at midnight. So providing HMRC have received your tax return by this time, then you would avoid the late filing penalty. Before we move on to the second deadline, don't forget to like the video and subscribe for more helpful tax content. Submit your questions in the comments below and we will endeavour to get them answered either in the form of a reply or possibly a dedicated video just like this one. You can also find us at tax2you.co.uk because although our aim is always to educate our clients as much as possible and share this information, we understand that tax can be confusing, stressful and time consuming, and that's where we can step in and help. Check out the thousands of Trustpilot reviews from clients who trusted us to do just that. Our services include preparation and submission of tax returns, registration for self-assessment, and even closing down your self-employment once you've finished trading. You'll find a full list of services offered on our website, plus links to each of these services below. Now, the second deadline that you'll need to meet is the payment deadline. If you have a tax liability, you would need to make payment to clear that liability by the 31st of January. This payment deadline applies irrelevant of how you submitted your return. So even if you submitted a paper return by the end of October, the actual payment deadline for any liability would still be the end of January. Of course, if you have no liability to pay or you've overpaid tax and HMRC owe you a tax refund, then the payment deadline simply doesn't apply. If you meet the criteria where HMRC are asking you for advance payments on account, which typically apply when your tax liability exceeds £1,000, then you would have a second payment deadline of the 31st of July that follows, where you would have to pay 50% of your liability again, which will then sit as a payment on account towards the following year's liability. These are the two main deadlines that taxpayers need to ensure they meet. There are also some lesser known deadlines that won't apply to everyone, but may still be useful to know. Occasionally, when you submit your tax return as a self-employed individual, you may not have the final profit figure for the year. In this situation, you would normally submit an estimated profit figure known as a provisional figure. Your deadline for coming back to amend this provisional figure would be 12 months from the submission deadline, which will be the 31st of January the following year. For those that qualify and want their tax liability to be collected through their wages or pension, you must ensure your return is submitted by the 30th of December following the end of the tax year. Otherwise, this option will not be offered. So, what actually happens if you miss one of the two main deadlines, the filing deadline or the payment deadline? For missing the filing deadline, a late filing penalty applies. The first penalty is for £100, providing the actual submission was no more than 3 months late. If your submission is made more than 3 months late, this is where the fine really starts to rack up, with a £10 per day penalty that applies from the 3-month mark for a maximum period of 90 days. That takes us up to 6 months and a maximum penalty at this point of £1,000. At the 6-month mark, you'll then be charged either £300 or 5% of the tax liability, whichever is the higher figure. At the 12-month mark, again, you'll be charged £300 or 5% of the tax liability, but for extreme circumstances, HMRC actually reserve the the right at this point to charge you up to 100% of the tax liability. It is most important that you do not miss the 31st of January deadline, and our team can help you with that. Just send us an email to info@tax2u.co.uk or use the link in the description and start your tax return now. As for missing the payment deadline, there are multiple charges that will apply. From the date the payment was due, which will be the 31st of January, interest will be charged at the Bank of England's base rate plus 2.5%. This will be chargeable on any outstanding balance until the debt is paid. There are also penalties charged for late payment. These are applied as follows. After 30 days, a penalty is applied equivalent to 5% of the tax outstanding. After 6 months, an additional 5% is charged. And after 12 months, which would be the 31st of January the following year, an additional 5% is applied. Here's an example of a return due to be submitted and paid 16 months late with a liability of £1,000. You can see late submission penalties, interest on the outstanding tax bill, plus a penalty for late payment. All of those being applied and turning my original £1,000 liability into a £2,847 bill. So let's assume the worst and talk about what can be done if you do miss the submission or payment deadlines. The first thing to do if you miss a deadline is make sure you get something submitted to HMRC. The late filing penalties tend to rack up quicker than anything else, so even if it's a case of submitting provisional figures because you haven't managed to calculate your self-employed profits yet, then at least this will buy you some extra time. Remember, you get 12 months from the original deadline to go back and amend provisional figures. Remember, Tax2u offer a valuable tax return service from only £60 plus VAT. That offer is valid until the 15th of January 2024. Link down below. Next up, if you have a tax liability, then get it paid as quickly as possible to avoid any interest accumulating. If you can't afford to make payment, then you should contact HMRC, who will likely offer you a payment plan. The details of the payment plan will be specific to the individual, depending on the size of the liability and what they believe you can afford to pay. And finally, what if you categorically feel that missing the deadline was out of your control? Well, HMRC will actually waive some penalties, providing the taxpayer has a reasonable excuse for being late. HMRC define a reasonable excuse as something unexpected or outside your control that stopped you meeting a tax obligation. Some common excuses that HMRC have accepted in the past include IT failures, in particular when you're having problems with their IT system, the government gateway, a fire which prevented you from completing a tax return or which caused a postal delay, an unplanned hospital stay. If it was something that was scheduled months in advance, then HMRC would expect you to have planned for this, but if you're rushed into hospital last minute, then that would be a credible excuse. And the death of a partner is also considered acceptable. Just remember though, they are likely to ask for evidence to support your excuse. To appeal a penalty with a reasonable excuse, you have a couple of options. If you received a penalty notice in the post, then there will be an appeal form attached, which can be returned to HMRC. Another option is to print, complete, and return form SA370. If you need our help, please send an email to info@tax2u.co.uk. And the final option is to use HMRC's online appeal tool, which allows you to appeal the initial £100 late submission penalty using your government gateway ID to log in. Remember, all of these appeal methods need to be done within 30 days of the date shown on the penalty notice. HMRC may accept later appeals, again if you have a reasonable excuse, but in reality, making an excuse to explain why your other excuse was late doesn't send the right message to the case officer who's going to review this. After viewing this video, you should understand the different deadlines that apply to those submitting a self-assessment tax return, what happens if you miss one of those deadlines, and how to appeal any penalties that are applied. Don't forget, at Tax2u, we provide an easy to use self-assessment service and would be happy to help whatever your situation. Just just follow the link below. That is all for today. Don't forget to check us out at tax2u.co.uk and subscribe to the channel for more helpful tax content. Thanks for watching. See you next time.